Good morning, everyone. Okay, so in the last class, we were discussing about the schedules, right? Okay, mainly related to your revenue account as well as balance sheet. So let's quickly recall the numbers relating to each and every schedule. So totally we have got like 15 schedules, right? Okay, so when it comes to preparation of financial statements, okay, of life insurance company or general insurance, both the cases we have got 15 schedules. So here we were discussing about the life insurance companies first. So when it comes to revenue account, totally we have got 4 schedules. So number 1 would be with respect to premium, 2 is relating to your commission paid, 3 is with respect to operating expenses, and 4 is with respect to benefits whatever is being paid. Okay, so premium, the basic source of revenue for the insurance company. After that, if you see, all these things are outflow, whether it is commission, it is not the commission which we are receiving, the commission which we are paying. Okay, so operating expenses paid, okay, benefits whatever is being paid to the premium holders. So after this, when it comes to balance sheet, we have got totally 11 schedule. Out of 15, 4 is with respect to revenue account and the remaining 11 is related to your balance sheet. Okay, so again, out of this particular 11, look at this. Number 5 would be share capital, 6 would be reserves and surplus, 7 is borrowing, 8 would be your investment, 9 would be your loans and advances, 10 is your fixed asset. So 10 similar to that of the banking company, there also it was fixed asset, and I told you how to remember it, right? So 10, accounting standard 10 also deals with fixed asset, same fashion. And then 11 would be with respect to cash in hand and balance with bank. Okay, so 12 would be with respect to advances and other current assets. 13 would be with respect to your current liabilities, 14 is with respect to your provisions, and then 15 is with respect to the miscellaneous expenses which has not been written off yet. Okay, so in the last class we had discussed the initial 4 schedules. Okay, that is the premium, the commission paid, okay, so other operating expenses paid and benefit paid. These 4 schedules we had discussed in the previous class. So let us straight away start with the schedule number 5, that is related to your share capital. So just like how we show share capital in any other company for that matter, like authorized capital, issued capital, subscribed capital, called up capital, paid up capital, same fashion will be showing over here. Look at this, authorized capital, below that just show how much is the number of shares and what exactly is the price per share. Okay, equity shares of rupees so and so each. Okay, same way issued share capital. Then we have got subscribed capital, called up capital. So after that, if you want, you guys can insert paid up capital, and below that, if at all there's any amount which is in arrears, calls in arrears, you guys can just deduct it. Okay, and if at all any share is being forfeited or cancelled, okay, we can reissue these shares, right? Okay, so due to non-payment of any of the amount, whether it is allotment or call money stage amount, so if the shareholders fail to make the payment, what the company will be doing? The company will be forfeiting these shares. Okay, that is nothing but the company will be cancelling these shares. Okay, so you guys can just show it separately over here by adding it to the called up or paid up capital. Same way, if at all there's any shares which has been bought back, just deduct it. Same way, if at all there's any preliminary expenses, you guys can just show it over here. So preliminary expenses can be the expenses related to issue of shares. Either you guys can deduct over here, or under other current assets you guys can just show it. Remember, we have a schedule 15 is with respect to miscellaneous expenditure, right? So there also you guys can just write the same. Clear? So that's all relating to share capital. So after this, we have got a sub schedule. Okay, so schedule 5A. Here you will be showing the pattern of shareholding, that is shareholding pattern. How much shares are held by the promoters and how much shares are held by others. And again, when it comes to promoters, how many are the number of shares and the percentage of shares which is held by the promoters in India and outside India. Look at this. So the shareholders, here you will be showing 2 things. Okay, so the promoters as well as the other people. Okay, so promoters and other than promoters. When it comes to promoters, you will have to make another bifurcation, that is how much is the number of shares which is held by the promoters in India and how much is the number of shares which is held by the promoters who are situated outside India. Look at this. So it is not only the number of shares which you will be showing, along with this you also need to show the percentage of holding. How much is the number of shares and what exactly is the percentage of shares which is held by these people. Hope you guys understood this. And calculation of percentage, it's quite simple, right? Now let's say totally 1 lakh shares has been issued by the insurance company. Out of this, let's say 60,000 shares is held by promoters, okay, and 40,000 shares is held by outsiders or others. So how do I show the percentage? 60% over here and 40% over here. How did I get this? The number of shares held by the promoters divided by the total number of shares. Okay, 100,000 or 1 lakh into 100. So this will give me 60%. So same way over here. Okay, so 40,000 divided by 1 lakh or 100,000 into 100. So this will give me 40%. So this is how I'll just calculate the number of shares which is held by the promoters is straight away over here, 60,000 and 40,000. Same way, this is how we'll be determining the percentage also. I hope this is clear to everyone. Does anybody have any doubt, any confusion? All right. So then the next schedule will be schedule 6. Okay, this is relating to your reserves and surplus. Okay, this is relating to your reserves and surplus. So here, when it comes to reserves and surplus, all the reserves you will be showing, whether it is capital reserve, whether it is capital redemption reserve, whether it is revaluation reserve, whether it is general reserve, whether it is catastrophe reserve, whether it is the balance in your P&L account. Okay, same way securities premium also will be shown over here. Okay, so look at this. So when it comes to reserves and surplus, capital reserve, okay, so capital redemption reserve, securities premium, revaluation reserve, general reserve, and in the general reserve, if at all there's any amount which you utilize towards buyback, you'll just be deducting it. Look at this, less amount utilized for buyback, same way less debit balance in your P&L account. So debit balance is nothing but the loss. Okay, so that loss amount you can just utilize from your general reserve. Same way, if at all there's any catastrophe reserve, you just show it over here. And then other reserves. Remember catastrophe reserve, I told you, right? Insurance company which is dealing with respect to life insurance business, 90% has to be maintained in the form of reserve. The remaining 10 will have to be maintained with the other regulatory authority. Okay. So then we have got balance in P&L account. That is the credit balance. Profit is what you'll be showing over here. Clear? Hope you guys understood this. Okay. Now, I've already written all these schedules in the notes for your reference. The same thing, whatever is there in the study material, for your reference, I've just written it over here. Okay, so not all, so few schedules. The reason being, like before this class was started, we were actually continuing the class because of this technical audio issue. We weren't able to record it. Okay, so during that while, all these schedules were discussed. Look at this. Shareholding pattern, reserves and surplus. Okay, exactly the same thing which is there in your study materials. Okay, so fine, let's speak about the next schedule, that is schedule 7. Schedule 7 is with respect to your borrowings. Okay, 8 is with respect to your investment, 9 with respect to loans and advances, 10 would be your fixed asset. Okay, so let's look into the schedule number 7, that is related to your borrowings. Now, any amount, whatever you're borrowing, okay, so whether it is from the banks, whether it is from the financial institution, whether it is from the other companies which are carrying on the insurance business, everything will have to be disclosed over here. Okay, pretty much self-explanatory. Let's look into this. So, the amount of borrowing in the form of debentures or bonds, okay, so amount of borrowing in the form of fixed deposit, amount which we have borrowed from the bank or financial institution, amount which is borrowed from other entities which are carrying on the insurance business, and any other entities. Okay, if at all you are borrowed from any other entity, just specify the nature over here. So basically whatever amount we have borrowed, we'll just be disclosing it over here, whether it is in the form of debenture or bond, whether it is in the form of fixed deposit, any amount which is borrowed from the bank, financial institutions or other institutions which are carrying on the insurance business, or if at all there is any other borrowing, just specify the nature. Simple, right? Clear? And again over here, if you see the note, the extent to which the borrowings are secured shall be separately disclosed, stating the nature of security. Okay, so that portion of secured borrowings has to be disclosed separately, and you will have to just make a disclosure with respect to what exactly is the collateral security which you provided in order to get this particular loan. So amount due within 12 months from the date of balance sheet should be shown separately. So from the date of balance sheet, any amount whatever you need to settle within a period of 12 months has to be shown separately. All right. So then we have got schedule 8. This is related to your investment. So any money whatever you have invested, whether it is in the form of the government bonds, whether it is in the form of government securities, approved securities, investment in real estate, investment in debentures, investment in shares, mutual fund, derivative instrument, all these things will be shown separately. So when it comes to investment, broadly two heads. Okay, so one would be the long-term investment, another would be the short-term investment. Both will be shown over here itself. Look at this. When it comes to investment, the broad classification would be long-term investment and short-term investment. All right. So when it comes to long-term investment, short-term investment, the content would be the same. Here also, if you see government securities, government guaranteed bonds, including treasury bills, here also it is the same. Okay, other approved securities, here also other approved securities. Okay, other investment, that is in the shares. Okay, look at this, other investment, whether it is in the form of equity share, preference shares, whether it is in mutual fund, okay, whether it is in derivative instruments, debentures, other securities, investment in subsidiaries, investment in properties that is related to your real estate. All these things is what you'll be showing. Only thing is, you will be showing the same things under long-term investment and short-term investment. Okay, same way, once you are done with this total, you will have to show the breakup of this total. How much is the investment which is made in India and how much is the investment which is made outside India. Even this breakup will be mandatory. Is this clear? I hope everybody understood this. Anybody having any doubt, any confusion so far? Is this clear to everyone? All right. Okay. So then we have got Schedule 8A. Okay, this is investment of policyholders. Okay, this was investment relating to shareholders. Okay, 8 was with respect to investment of shareholders. 8A is with respect to policyholders. Okay, so I'll just write it over here. Investment shareholders. Same way, whatever investment you are making pertaining to policyholders, you will be showing the same. So exactly the same thing. If you see the content, it's same thing, long-term investment and short-term investment. Okay, so till here it is same, government securities, government guaranteed bonds, including the treasury bills, other approved securities, investment in shares, mutual fund, debentures, derivative, other securities, investment in real estate. Till here it is same. Here we have got two more add-ons. Okay, so what are those? Investment in infrastructure, social sector, and other than approved investment. So when it comes to shareholders, they are supposed to make the investment only in approved securities, whereas policyholders, you can make the investment in other than approved securities also. So that's why we have got two more additional thing, investment in infrastructure and social sector, and then investment other than approved securities. Same thing over here. Is this clear? Hope you guys understood this. Okay, so let me just write this particular schedule. Okay, so this would be 8A. So what is 8A? This is relating to investment of the policyholders. Exactly the same thing here, you will be having two more add-ons. Okay, so two more add-ons. One is investment in, I'll just write it like this. Three, 4 would be investment in infrastructure bonds. Look at this. Okay, last thing would be investment in other than approved securities. Okay, so investment other than approved securities. Okay, so you will have to just show the breakup of this as well. Same would be the case when it comes to short-term investment. Here also it would be exactly the same. Hope you guys understood this. Okay, two more add-ons, guys. Okay, so investment in infra and social sector, and then the last one would be what? The last one would be with respect to investment other than approved securities. Simple, right? Okay, so this was with respect to investment. Okay, so we have got certain points with respect to investment. Let's just look into this. And again, over here also you will just be showing the breakup. How much is the investment in India and outside India? Okay. So once you get the total, this would be your total. After this, you will have to just show the breakup of investment in India and outside India. Simple, right? So the total, whatever you get over here, you just need to show the breakup of this particular total. Out of this total, how much is the investment portion which is made in India and how much is the investment which is made outside India. All right. So let's move on to the next schedule. Okay, before that, let's talk about these particular points relating to investment. So investment in subsidiary or holding company, joint venture, associate shall be separately disclosed at cost. So these investment in subsidiary company has to be disclosed at cost. Okay, and then holding company and subsidiary company shall be construed, okay, as defined in Companies Act. What exactly is the meaning of holding company and subsidiary company? That would be as per the definition provided in the Companies Act. Joint venture is a contractual agreement whereby two or more parties undertake an economic activity which is subject to joint control. You already know what exactly is this joint venture, right? At your foundation level, you would have already discussed this. So joint control is a contractual agreement sharing the power to govern the financial and operating policies of an economic activity and to obtain benefits from it. Okay, so all these things not important. Associate is an enterprise in which the company has significant influence and which is neither a subsidiary or joint venture. So associate company is a company which is not a subsidiary company nor it is a joint venture. Only thing is, I'll be having significant influence over that particular company. All the decisions relating to that company, I'll be able to influence it. Okay, so here I've given you the meaning of significance influence if you guys can see. So significant influence for the purpose of this schedule means participating in the financial as well as operating policy decision for the company but not control of those policy. Significant influence may be exercised in several ways. Okay, for example, by representing on the board of directors. So majority of the directors in the board of directors group will be relating to my company and all the major decisions will be taken care by my company. I'm influencing the decision relating to the other company. So that other company will be my associate company. Okay. So participation in the policy making process, any process with respect to making a new policy, okay, I'll be involved. Okay, so without my decision, so the company will not be able to frame any new policy. Okay, so material intercompany transaction, interchange of managerial personnel, okay, or dependents or technical information. So interchange of managerial personnel. So few people from my company I'll be appointing in the other company, or I can take the human resource from that other company for the purpose of my company's work. Okay, this is what is called as interchange of human resource. Okay, so significant influence may be gained by share ownership, okay, statute or agreement. So as regard to share ownership, if an investor holds directly or indirectly through its subsidiary 20% or more of the voting rights, this is important. Okay, so if at all I'm holding 20% or more, either by myself or along with the investment in the form of my subsidiary, either I should be holding in that particular company, or even if my subsidiary company is having interest in that other company, it is still fine. Put together, if it is exceeding 20% of the voting right, the other company will be treated as what? The other company will be treated as associate company. Clear? Okay, so it is presumed that the investor does not have significant influence unless it can be clearly demonstrated that it is not the case. Okay, so conversely, if the investor holds directly and indirectly through subsidiaries less than 20% of the voting power of the investee, it is presumed that the investor does not have significant influence. You already know this, right? So if I want to have significant influence over the other company, I should be holding at least 20% of the voting rights in that particular company, either directly or indirectly. Directly is as good as me purchasing the shares of that particular other company. Indirectly is as good as through my subsidiary. Even if my subsidiary company has invested in that other company, it would still be treated as the associate company. Look at this. Suppose there is H Limited. Okay, this is the holding company. I've got a subsidiary company called as S Limited. This is my subsidiary company. See, even if I'm holding, okay, greater than 20% of the voting rights, okay, so I'll be called as the holding company, and let's say this is C Limited. C Limited will be treated as associate company. Correct? So, or it can also be indirectly. Now, let's say I'm not holding any voting right, whereas Yes Limited, that is my subsidiary company, that is holding greater than 20% of the voting rights. Even in that case, I'll also be treated as the holding company. Okay, even in that case, this particular C Limited will become what? It becomes the associate company for H Limited. Is this clear? Hope everybody understood this. Anybody having any doubt, any confusion so far? Alright, so let's look into the next point. Aggregate amount of company's investment other than listed equity shares and derivative instrument, and also the market value thereof shall be disclosed. Okay, so what exactly is the aggregate value of the investment which we have made in the listed companies? Okay, derivatives, it has to be separately disclosed. investment made out of catastrophe reserve should be shown separately. So these particular reserve which I am maintaining for the purpose of settlement of the claim, I will not be maintaining it. Okay, ideally I would have invested these things in approved securities, right? So wherever I have invested out of these particular reserve, it has to be disclosed separately. And then debt securities will be considered as held to maturity. Okay, so if at all there is any debentures, okay, that would be considered as if I am holding till the maturity. Okay, it would be treated as long term investment, okay, which is held till the maturity. So investment property means the property, that is land, building or part of the building or both, held to earn the rental income or for capital appreciation. So if at all I have made any investment in the real estate, okay, real estate would be considered as the investment which is made in land, building or both. Okay, for what purpose? Either for the purpose of earning some rental income or for the purpose of capital appreciation. Okay, that is nothing but if at all the value of the property increases after 5 years, I'll be selling it and I'll be generating some profit. Clear? So it can be held either for the purpose of generating the revenue, that is in the form of rental income, or it can be held for the purpose of capital appreciation. Clear? So I don't think there's any doubt pertaining to this schedule number 8, that is investment. Alright. So let's look into the schedule number 9, that is relating to your loans. Alright. So when it comes to loan, security wise classification on mortgage of property in India and outside India, on shares, bonds, okay, government securities and others just specified. So you'll just be showing secured portion as well as unsecured portion. Okay, so same way unsecured portion, loan against the policies. Okay, so loans other than these things. And same way borrowings, okay, classification, the borrowings from the central or state bank, bank and financial institutions, subsidiary companies. Okay, so loan against property or policies, others. Same way, performance wise classification, we have got different bases on which we'll be categorizing the loan. Okay, so security wise, secured and unsecured. Okay, so borrower wise, okay, from whom and all you have borrowed, whether you have borrowed from the banks, whether you have borrowed from the subsidiary company, whether you have borrowed, okay, so against these particular policies, loans against these policies. Okay, everything will be shown separately over here. And then performance wise classification, loan classified into standard in India and outside India, non-standard loan, less provision in India and outside India. Remember, when it comes to banking companies, we had something called as standard asset, substandard asset, doubtful asset and loss asset. So same way over here. So loans which are classified as standard loans in India and outside India. So loans which are classified as non-standard loans. Okay, so you will have to maintain the provision against these loans. Okay. And then finally, maturity wise classification, short term and long term. Okay, so totally we have got 4 bases of classification of these loans. Okay, so let me just write it in the notes. Okay, this is schedule 9. Pertaining to loan. Okay, now look at this particular classification, what we'll be making. So first basis would be security wise classification. Okay, so when it comes to security wise classification, look at this, secured and unsecured. Okay, so you'll just be showing the secured. So again, when it comes to secured, on mortgage of property in India, on mortgage in India and outside India. So the property which I'm pledging, okay, so whether it is in India or outside India, okay, so same way will be showing on shares, bonds, government securities, etc. So whether I'm mortgaging these shares, okay, so which I have in the form of investment, shares, bonds, government securities, whatever I have invested, if I'm pledging those things, okay, same way others just specify. Okay, so then the next classification would be unsecured. And the next thing would be unsecured. So whatever is your unsecured loans, okay, so these loans, are they the loans against the policies? Are they the other loans? You will have to just specify the same. Loans against the policies and then others specify. Alright, so this is the first classification, that is security wise classification. Then the second thing would be what? On the basis of, okay, the lender. Look at this, borrower wise classification. So here I'll be making the classification as per the borrower. Okay, that is from whom and all I have borrowed the amount. Okay, so first thing is any amount which is borrowed from the central or state government. Central or state government. Okay, so borrower wise classification, the amount what we borrowed from central or state government. Same way, any amount which we have borrowed from bank and financial institutions. Any amount whatever we have borrowed from the subsidiary companies. Okay, so other companies which are in the similar line of business. Okay, so loan against policies and others. So wherever it is others, you will have to just specify the nature of the same. Okay, so here you will be getting the total. Okay, so total over here and same way over here. Okay, so here borrower wise classification, from whom and all have you borrowed the amount. So here also you will be getting the total. So after this, the next classification, if you see, look at the next classification, performance wise classification. Okay, so let's see what exactly is this performance wise classification. So here you will be showing the standard loan and non-standard loan. Okay, look at this, loans classified as standard, okay, and non-standard loans less provision. Okay, so standard loan in India and outside India, and then you will be showing non-standard loans. Okay, so non-standard loans, again the same thing, in India and outside India. That's all with respect to performance wise classification. And then finally we have got one more classification, that is based on the maturity. Okay, so maturity wise classification, this would be short term and long term. Okay, look at this, when it comes to maturity wise classification, it can be short term or long term. Short term and then long term. Okay, only two classification over here, and then you will just be writing the total. So broadly, if you see, we have got 4 classifications. I hope these 4 are clear to everyone. Yes. So let's look into the next schedule, that is schedule 10. This is something related to your fixed asset. Okay, so look at this. So fixed asset, you will be showing the cost or the gross block. Okay, so the opening value, if at all there was any additions during the year, any deductions during the year, and closing value. Then when it comes to depreciation, the depreciation up to the last year for the current year, depreciation on sales or adjustment. Okay, so till date, and then the net block. Okay, so for the current year as well as previous year. Simple. So I'll just be writing it over here. So basically you'll be showing three components: the cost of the asset, okay, the depreciation of the asset, and then the net block. Let me just write this. This is schedule 10. Which is related to your fixed assets. Particulars. Gross block will be showing the opening balance, additions, deletions or deductions. Deductions is nothing but the assets which you have sold. Okay, so then you will get to know the closing balance. Okay, this is related to what? Cost or gross block. Okay, so then comes the turn of depreciation. Okay, so when it comes to depreciation, you will be showing up to the last year. Up to previous year or last year. Okay, so for the current year, and then on sale or adjustment, depreciation on sale or adjustment, and then total depreciation. Okay, so this would be your depreciation. So once you are done with this, we will get to know the net block. Okay, so net block as on the previous date and current year. This would be your net block. Previous year, sorry, first you will be showing the current year and then the previous year. Okay, so below this, category wise, each and every asset you will be showing it separately. Look at the categories. You will be showing the goodwill. Okay, so any intangible asset, show it separately. So freehold land, leasehold property, building, furniture, fittings, information technology, equipment, vehicle, office equipment, others, specify. Okay, so then you'll just show the total. Okay, and same way for the previous year also you'll have to show the same. So I'll just write it over here: goodwill, other intangible asset. Okay, so then freehold land, leasehold property, building, furniture, office equipment, information technology, vehicle. Okay, so others, specify. So in case there is any other fixed asset, just specify the nature of the same. Simple. So after this you just need to write the total. Hope you all understood this. Clear about the fixed asset schedule, that is schedule number 10. Alright, so let's move on to this schedule number 11, that is related to your cash and bank balance. So when it comes to cash and bank balance, look at this. So cash including the checks, drafts and stamps, bank balance, the deposit which you are maintaining. Okay, so short term, that is within 12 months, and others. So the deposit whatever you are maintaining, or the bank balance whatever you are maintaining in current account. So the amount what you are maintaining in deposits account, the amount what you are maintaining in your current account, and others. Money at call or short notice with banks and with other financial institutions and others. Okay, so you get the total. Balance with non-scheduled bank, okay, included in 2 and 3 above, you will have to just show it separately. So non-scheduled bank situated in India and outside India, if you guys are maintaining any balance as an insurance company, you will have to just disclose it separately. Okay, so let me just draft the schedule number 11, that is relating to your cash and bank balance. So cash and bank balance. Okay, so first thing would be the cash. Okay, so including the checks. Okay, so draft as well as the stamps. So cash including the checks, drafts and stamps. Okay, and then you'll be showing the bank balance. So bank balance again, okay, in deposits. Okay, so in deposits account. Okay, so whether it is short term or others, short term and other deposits. Same way in current account. Okay, so others, just specify the nature. And then we have got money at call or short notice. Okay, this would be the second thing. So cash in hand, cash at bank, money at call or short notice. Others, specify. Okay, if at all there is any other balance which you are maintaining, just specify the same. Okay, so normally out of these schedules, it's not that all the information we need to write while solving the illustration. So whatever has been provided in the question, you should be able to identify whether it should fall under which schedule, and just include it in that particular schedule, more than sufficient. Clear? All right, so let's look into the next thing. So after this, you just get the total. So if at all you're maintaining any balance in the non-scheduled banks, okay, so that has to be disclosed separately. Okay, so balance, cash and bank balance in non-scheduled banks. Okay, so in India and outside India. Simple, right? Hope you all understood this. Okay, so let's move on to the schedule number 12, that is relating to your advances and other assets. So after that, we'll be having current assets and current liability. Look at this. This would be your current liabilities and provisions. Okay, so let's talk about this, advances and other assets. This would be your schedule 12. So if at all there is any advances or other assets, just specify the same. Now look at this. So when it comes to advances and other assets, you'll be showing separately how much is the advances and how much exactly is the component of other assets. So advances, reserve deposit with seeding companies, advances to seeding companies, application money for investment, prepayments whatever we have made, advance which is made to officers or directors, advance taxes paid, okay, or TDS which is deducted, others, specify the nature. Other assets, income accrued on investment, outstanding premium which is receivable, agents balances, okay, so foreign agencies balances, due from other entities, due from subsidiary, reinsurance claims, okay, balance which is receivable, deposit with Reserve Bank of India and others. So whatever amount is receivable, because this is an asset, okay, so we'll be showing the same. So let me just write these points. So here we'll be showing advances and other assets. So when it comes to advances, reserve maintained or reserve deposit with seeding companies. We will be maintaining certain reserve with the regulatory authority, right? So that will be mentioned over here. So advance which is made to seeding companies, okay, so advance made to seeding companies. So if at all we have given any advance, that becomes our asset. So that is what we'll be showing. Okay, so any deposit money which is there with them, or any advance, okay, in addition if we have paid to the seeding company, application money for investment. So I've just paid the application money, the shares has not been allotted yet. Okay, so till the shares are allotted, that becomes my advance money which is with the other company. Okay, so till then it would be treated as advance. Okay, so any prepayment which is made, if you are paid some amount in advance, okay, so advance to officers or directors, okay, so any advance tax including TDS, and then others, just specify the nature. All right. Now after this, okay, so one is advance, the other thing would be what? Other assets. Now when it comes to other assets, look at this, we'll just be showing a list of all these items. Yeah, look at the other assets. So income accrued on investment, outstanding premium which is receivable. Okay, so income accrued on investment, outstanding premium, that is nothing but the premium which is receivable. Okay, so agent's balance receivable. Okay, so foreign agencies balances. Then we have got due from other entities, any amount which I am supposed to receive from other entities. Okay, so due from is as good as the amount which I am supposed to receive from other company. Okay, so due from other entities, due from subsidiaries, then we have got reinsurance claims or balance which is receivable. Okay, so reinsurance claim or balance receivable, any deposit with RBI, any deposit what we are maintaining with Reserve Bank of India, if at all there is any other, okay, just specify the same. So here we'll just be showing the advances which you have paid to the other entities. Okay, so and then the other assets. Okay, this is what we are supposed to show over here. Easy. Hope you guys understood this, and I don't think there's any confusion relating to the same. Alright, so let's move on to the next schedule, that is schedule 13. So schedule 13 is relating to your current liabilities. All your current obligation or current liabilities will be shown over here. So look at this, agents balances, balance to other insurance company, okay, advance from treaty companies, deposit held. If we are holding some deposit, we are supposed to pay it, that becomes our liability. Okay, or if we have made the deposit with some other entity, okay, that becomes our asset or receivable. Okay, so premium which you have received in advance, creditors, due to subsidiaries, there it was due from subsidiaries or holding company, here it is due to. So claims outstanding, annuities which are due to officers or directors. From the officers or directors, if the insurance company has collected the amount, that becomes their liability. Okay, so others, just specify the nature. A very simple schedule, just okay, let's just write this. So all your liabilities is what you are supposed to show it over here. Okay, so here you will be showing your current liabilities. Okay, so what and all will you show? So the agent's balance, okay, so that is the amount which you are supposed to pay to the agent. So agent's balance is payment, okay, or payable, balance due to other insurance company, balance due to, if it is due from, that would form part of schedule 12. If it is due to other companies, then it is your liability, you will be showing under schedule 3. Okay, so due to other insurance companies. Then we have got advance from treaty companies. Okay, so premiums received in advance. Sundry creditors. Okay, so due to subsidiary or holding company. claims which are outstanding and annuities due. Okay, so annuities due, claims which are outstanding. I just need to settle the claim amount, it is pending. Okay, that becomes my liability. So due to directors or officers, and then others. Others, just specify the nature. Simple. Easy, right? So all these liabilities is what you'll be showing. Okay, and I hope you guys can remember them. See, once you see the item, you should be able to identify, okay, so this item should be forming part of which schedule. Okay, that much of knowledge would be more than sufficient. Then when it comes to schedule 14, this is relating to your provision. Okay, so schedule 14 is related to provision. Okay, let's see what and all provisions are shown over here. So provisions which are maintained for taxes less payment of taxes or TDS, provision for proposed dividend, provision for dividend distribution tax, bonus payable to the policyholders and others. Okay, so provision, the first thing would be provision for taxes less advance tax and TDS. Okay, so less payment and taxes deducted at source, then provision for proposed dividend. Okay, then we have got provision for dividend distribution tax. Okay, bonus payable to policyholders. And then others, just specify the same. Simple. So that's all relating to the provision. Now let's have a look into the last schedule, that is miscellaneous expenditure. Okay, so the balance in the miscellaneous expenditure which has not been written off yet. Okay, look at this, discount allowed on issue of shares or others, just specify the amount. The next schedule would be schedule 15, miscellaneous expenditure not written off. So here we have got just two things. Okay, one would be the discount allowed on issue of shares, and then if at all there is any others, specify the same. Okay, so these are your 15 schedules. Okay, so we'll be discussing this particular illustration wherein we'll be learning how exactly do we prepare the financial statements. Okay, so where and all are we supposed to show these items. Okay, you guys should be able to identify. So kindly go through this particular schedules. So after this we'll be solving this illustration. Just go through it once. Alright, so fine, let us just start with this illustration. Let me read this illustration for you guys. So the following balances appeared in the books of Happy Mutual Life Assurance Society. So this is a life assurance company. So you will have to remember that schedule which is applicable. Okay, so remember we have got two forms, Form A and Form B. So over here for life insurance business, Form A would be the one which will be applicable. So you will have to just remember this. So let's look into this. So they have given you particular debit balance and credit balance. So let us see what and all things are appearing on the debit balance. Okay, so on the debit balance we have got quite a few things. Okay, so let's see. Yeah, so we have got claims less reassurance paid during the year, by death, by maturity. Okay, so by annuities 4,400, 3,012. Furniture and office equipment cost has been given, which is 500. Okay, including 80 lakhs which was bought during the year. Printing and stationery expenses which we have got. Okay, this is actually printing and stationery expenses. There's a slight alignment problem over here, be careful. Okay, so cash and balance with bank has been given, cash and stamp in hand, surrender less reassurance, commission has been given, expenses for the purpose of management, sundry deposits with electricity companies. Okay, so advance payment of taxes, sundry debtors, agents balances, income tax has been given, income tax on interest, dividend and rent has been given. Okay, there's slight alignment problem. I hope you guys can just manage that. So then we have got life assurance fund at the beginning of the year, okay, which was 1 lakh, premium less reassurance 30,000, claims less reassurance outstanding at the beginning of the year by death, maturity and credit balance which is pending for adjustment, consideration for annuities granted, interest, dividend and rent, registration and other fees being given. We have got sundry deposits, tax provision has been given, premium deposit has been given, sundry creditors, contingency reserve, furniture and office equipment, depreciation. Okay, so building depreciation account has been given. So on the debit balance we also have quite a few. Okay, so loan and mortgage 300, loans on policies, investment. Okay, so 500 lakh deposited with Reserve Bank of India. So house property at cost including 170 lakhs added during the year. Okay, the total of this trial balance is 141,508. Okay, so from the foregoing balances and following information, prepare the balance sheet of Happy Mutual Life Assurance Society Limited as on 31st March 2014 and its revenue account for the year ended on that particular date. So claims less reassurance outstanding at the end of the year by death was 1,200, by maturity was 800 lakh, expenses outstanding was 120 lakh and prepaid expenses was 30 lakh. Provide 90 lakh rupees for depreciation on building, 30 lakh rupees for depreciation on furniture and office equipment. Okay, so furniture and office equipment it is 30 lakh and 220 lakh for taxation. So premiums outstanding was 4056 lakh, commission thereon was 130 lakh. Interest, dividend, rent outstanding net amount is 60 lakh and interest and rent accrued is 700 lakh. They're just asking us to prepare the revenue account as well as the balance sheet. Okay, so just go through this particular illustration. We'll be solving this. Okay, just go through each and every adjustment in detail. So take some time and identify, okay, which items will be falling under what category. Okay, kindly do that particular activity. Okay, so let us just classify these things. Okay, so under which and all schedule will these things be coming? So first thing is, what is the schedule number 1? Schedule number 1 is with respect to your premium, right? Now here when it comes to premium, what and all information have they given? Premium is the basic income for you, correct? So you will have to just be looking into the credit side. Okay, look at this here. If you guys just have a look, you guys will be able to find the premiums. Okay, premiums less reassurance. So this would be your schedule number 1, correct? So this would be the first schedule. So what about the second schedule? After that it's all about the outflow, right? So schedule 2 is with respect to what? 2 is with respect to the commission which is paid. Now commission would be an expense that would be appearing on the debit balance. Now look at this. When it comes to commission, what and all information do we have? Here we have got the commission, right? So this would be schedule number 2. Okay, so commission over here. Is there any other information relating to commission? Yes? Any other commission for that matter? Just check once again. Yeah, so here we have got premium. Okay, so this adjustment will be giving in schedule number 1 itself, and again over here we have got 130 rupees, right? Okay, so with respect to commission thereon. Okay, so we have got commission over here also. Okay, anything else? That's all. That's all, right? So this would be again the adjustment with respect to schedule number 2. So 1 and 2 are done. Now what about the third schedule? What is schedule 3? Schedule 3 is with respect to other operating expenses. Now what and all are the operating expenses? Somewhere that mentioned the expenses relating to your office and administration, right? So all these things would be your operating expenses. Okay, so let's see what and all do we have. Here we have got administration expenses, expenses relating to management. So that becomes your schedule 3. So do we have anything else? Just check out for the expenses. Printing and stationery for that matter. Okay, this is schedule 3. Okay, anything else? That's all. Just cross check once again. All right, that's all. So, and again over here depreciation they have given, even this depreciation for that matter you will be showing under other operating expenses. After this schedule number 3, what is the fourth schedule? The fourth schedule is with respect to what? The benefits whatever is being paid. Now when it comes to benefits paid, okay, so let us see what and all information do we have. Benefits paid, okay, so benefits paid, if you see the settlement amount basically, okay, so this is the claims whatever has been paid, okay, this would be your schedule number 4. All these information, this 4,400, okay, so and again this 3,000 rupees, all these things would be your schedule number 4. Clear? We got certain adjustments relating to the same which will be giving effect, okay, so here if you see claims less assurance, so what we are supposed to do is these things will have to deduct in schedule 4, okay, so these things will just be deducting in schedule number 4. Is this clear? So 4 schedules are done, okay, that is pertaining to your revenue account. Now 5th one is pertaining to share capital. Now have they given any information relating to the share capital over here? Just cross check. Share capital, it will be showing credit balance. Have they given any number of shares or the value per share? Just check once. Now share capital we don't have anything, so schedule 5 would be completely blank, okay, because they haven't given any information as such, okay. So what about schedule 6? Schedule 6 would be with respect to reserves and surplus. Now when it comes to reserves and surplus, let's see what and all do we have. That mentioned quite a few reserves, right? Okay, so including the securities premium you will be showing over here, okay. So what and all reserves do we have? Yes, let's look at this reserves. Yeah, here it is. Contingency reserve we have got, okay, this would be schedule number 6, okay, so which is 700 rupees, okay, so this would be the reserve which will be showing. So after this, what else do we have? Yes, check out the depreciation as usual. This would be schedule number 3. Operating expenses you are supposed to show. Reserves, do we have any other reserve by any chance? Just cross check once. That's all. All right, so that's all, and then the balance whatever we get from this particular revenue account, even that will be transferred to reserves. So then comes schedule 7. What is schedule 7? 7 would be with respect to borrowing, okay, again is a liability, we'll be showing it on the credit side. Now borrowings, if you guys remember, okay, remember the classification, okay, so based upon the collateral security, based on the institution from where we are collecting this particular borrowing, all these things will be shown, okay. So let's just talk about the borrowings now. Okay, so when it comes to borrowings, yes, so that would be showing liability, on the credit balance. So if you see over here the deposit 7 and then the premium deposit, okay, these two would be with respect to borrowings, okay. So then what is your schedule number 8? What is schedule 8? 8 is with respect to investment, right? Do we have any information relating to investment? Investment is an asset, so therefore we'll be showing debit balance. We'll have to just look into this. Now when it comes to investment, what and all investment do we have? Just cross check once. All these are expenses. Anywhere you come across investments, here it is. Look at this. So this would be what? This would be your schedule number 8. Okay, so 1,04,000 investment we have got. So that would be your schedule number 8. Anything else? Yes. So this is also an investment, right? The investment which you made in house property. Okay, so even this would be schedule number 8 only. That's all right. So after this, what about schedule 9? 9 stands for loan. Okay, so let's talk about the loan. So here we have got loan from mortgage and policy. Both these would be your schedule number 9. Okay, so what about 10? 10 would be your fixed assets. So all your fixed asset, whatever they have shown, that will be shown under schedule number 10. Okay, so what and all fixed assets do we have? So sundry deposits. Yeah. So 10 would be your fixed assets. We'll see, because they have not given all the information in one place. Here if you see, building depreciation account they have given. Okay, so furniture and office equipment. Okay, this would be schedule number 10. Okay, we'll have to consider the depreciation as well. So what about schedule number 11? 11 would be cash and balance with bank. Okay, so what about the cash balance? Here it is. Okay, this would be 11, this would be 11. Okay, so anything else? Balance with bank? That's all right. Okay, so this would be schedule number 11. What about schedule number 12? Advances and other assets. Okay, so any advances which we have got. So we have got a lot of advances. Okay, so all these advances will be shown as schedule number 12. Okay, so if you see over here, schedule 12 over here. Okay, so advances and other assets. So all these would be your advances. Agents balance, it is receivable. Okay, so you will be showing over here. Okay, so anything else? Just cross check once again. That's all right. Do we have any other advances or any other deposit which we are maintaining? Let me just check once. Yeah, sundry deposit with the electricity company, even this would be an advance. That's all right. So these are your advances. Okay, so that's all relating to 12. So what about 13? So 13 would be with respect to your current liabilities. Now liabilities, we'll have to just look into the credit side. So when it comes to current liabilities like creditors and other things, okay, so let's see what and all do we have. So sundry creditors, here it is. Okay, so this would be schedule number 13. Okay, so along with this, do we have any other thing? In the adjustment, they have given quite a few outstanding expenses, right? Even those things will be shown under current liabilities only. Okay, so anything else? That's all right. So after this, so we are done with this 13. 14 would be with respect to provisions. Any provision, whether it is provision for taxation or any other provision, that will be shown under schedule number 14. Okay, probably in the adjustment they would have given. Okay, so look at this. 220 for taxation. Okay, they're asking us to create provision for 220. This would be schedule number 14. And then 15 would be your miscellaneous expenditure. Okay, so miscellaneous expenditure, in this case, I don't think they have given any preliminary or miscellaneous expenditure which is not been written off yet. Okay, so fine, we'll just be solving this illustration now. Okay, so this is illustration number 23. So they're asking you to prepare what? The revenue account as well as the balance sheet. Okay, so first what we'll do is, we'll just prepare the format of this particular revenue account, and then we'll be preparing the notes relating to the same or schedules relating to the same. So revenue account, if you see, we already discussed the format, right? So everything has been given in the notes. All that is required is you just need to go through it. Look at this, the format of revenue account as well as the balance sheet. Okay, both has been given over here. This is the format of the revenue account. I'll just copy paste it over here. So what is the name of the business entity over here? Happy Mutual Life Assurance Society Limited. Okay, so Happy in the books of Happy Mutual Life Assurance Society Limited. Okay, so we don't have any previous year information, so we need not worry of this. Okay, so first thing would be what? The first thing would be the balance in this particular premium. Okay, so premium whatever has been earned. Okay, I'll just write it over here. Okay, so I'll just be writing this particular format. The first thing is the premium earned. the net amount. Okay, this would be schedule number 1. Okay, the schedule relating to the same will just be preparing. Okay, so after this, what else do we have? If at all there's any other income, okay, so income from investment. Okay, the same format, guys. I'll just show you guys. Okay, the same format is what I'm writing. Okay, so look at this, the premium earned net amount. Okay, so all these things we'll just be writing the actual figures once we prepare or once we are done with these particular schedules. All right, so same way we'll just have to prepare the balance sheet also. Let me just copy paste the format. After that we'll just keep on preparing the schedules. This is the format of the balance sheet. You'll have to just remember this particular format, guys. Okay, so everything has been written. It's all about how well do you guys remember this particular format. Okay, this is the balance sheet. So balance sheet as on what date? I mentioned the date, right? So 31st March 2014, is it? Yeah, 2014. Okay, so let me just keep on preparing these particular schedules now. Okay, so we just need to prepare the schedules and fill up the figures in the balance sheet. Okay, so what is schedule 1? Schedule 1 is relating to your premium. Okay, so schedule 1 is with respect to premium. Now here if you see premium information, they have given in 2 places. Okay, we have already written, if you guys are able to see, premium less reassurance, it is 30,000. Okay, so premium less reassurance, okay, it is 30,000. Net amount I have written 30,000 rupees. So along with this, if you guys can see, there was an adjustment, right? So in the adjustment, what information have they given? Yes, look at this particular adjustment which they have given. Yeah, here it is. Premium outstanding is 4056. Can you guys see this? Yes, 4056 is premium which is outstanding. It is as good as the premium which is receivable. Okay, so premium outstanding, it is given in the adjustment. How much is it? And will this be your current asset or current liability? This is receivable, therefore it is an asset. Okay, so how much is receivable? Premium receivable is 4056. That's all right. We don't have any other information relating to premium. So total amount would be what? 34,056. Okay, this is the amount which I'll be writing in my P&L account, 34,056. I'll just give the reference number over here. Okay, I'll not be writing the figures, just giving the link. Okay, so this is the premium account. So we are done with this premium. So is there any reinsurance which is accepted or ceded? We don't have anything as such. Okay, there's no reinsurance which is accepted, nor do we have any reinsurance which is ceded. So income from investment, have we received any income from investment? No. Okay, so absolutely no other sources of income. Do we have any other sources of income as such? Nothing, right? Do we have any other income? Just check once. So income, you'll have to look into the credit side. Yeah, here we have, if you see, interest, dividend and rent received, 4, right? So let us just write this. Interest, dividend and rent received, we have got 4. Okay, so anything else? This is done. Anything else? Just cross check once again. And this is not interest, dividend and rent. It is actually contingency over here, if you guys can see. Okay, look at this. So consideration for annuities granted, interest, dividend and rents, it is 4. Okay, this is not 4 actually. So we have got registration and other fee. Okay, 3600. So 3600 registration and other fee. I'll just be specifying the nature, registration and other fee. Okay, so done with this registration and other fee. What else do we have? Look at the adjustments. Here if you see interest, dividend and rent outstanding net, they have given it as 60. Okay, so interest, dividend and rent, it is 60. I'll just write it over here. Okay, this is 60. And then interest and rent accrued net amount is 700. Okay, so we have got 700 plus 60. This is 760. Okay, so totally it is 760 over here. Is this clear? Yes. So total will be 760 pertaining to interest and dividend and 3600 relating to registration and other fee. All right. So fine. Let's just look into the next item. Yeah, it's the same. Look at this. 4360 is what they have written, right? So if you just add these two, it would be exactly 4360. And what about the total of the income? Yes. You also have annuities, right? So we'll just be specifying that also. Annuities income, it is how much? We just saw it over here, right? How much is it? It is 4. Okay, so what about the total? Just cross check what is the total. Total, if you see, it is 38,420. Let's just cross check. Do we have any other thing? Annuities granted, we have got 4, and they have also written registration and other fees 4. Do we have registration and other fee, which is again 4 rupees? Okay, registration and other fee, it is 4 rupees. There's a lot of alignment problem, guys. Okay, so look at this. This is actually interest, dividend and rent. 3600 is actually interest, dividend and rent. So to this, I'll have to add 3600. And this would be 4 rupees. Okay, so total interest, dividend and rent would be what? 3600 over here, and in the adjustment they have given outstanding, right? Okay, which is 60 and 700. Okay, 760. Okay, so 760 plus 3600. So this would be the total income in the form of interest and dividend. Then we have got annuity interest, which is 4 rupees, which has been mentioned over here, this 4 rupees. Okay, and then sorry, it is this 4 rupees. Okay, annuities and interest, and this 4 rupees is registration fee. There is a slight alignment problem in this particular illustration. I'll just write it cleanly over here so that you guys understand it. See, it's actually this 3600 is what? This is the interest and dividend, 3600. Okay, so this annuity is 4 rupees. Okay, and what about registration and other charges? It is that 4 rupees. Now I hope you guys are able to understand. Okay, so same thing I've written, annuity is 4, registration and other fee, it is 4, and what about dividend? How did I get this? This is 3600, and in the adjustment I have given two things. Okay, so 60 over here and 700 over here. So effectively it is 3600 plus 60 plus 700. Is this clear? Anybody having any doubt, any confusion so far? Hope everybody understood this. Okay, so that's all relating to income. Now let's talk about the expenses. If you see the total now, it is how much? 38,424. Here also if you see, it is 38,424. Okay, till here it is absolutely correct. So then comes schedule 2, which is with respect to commission. Now let's talk about this particular commission. What and all information have they given relating to commission? Let's just look into this. So schedule 2 is relating to your commission. So what about commission? What and all information have they given relating to commission? Let's just cross check. So somewhere that given the commission which was paid, right? So schedule 2, I would have numbered it. Here it is. Okay, look at this. and be careful with the amount. I think it is 6,200. Okay, so this is the commission 6,200. I'll just write it over here. Commission paid 6,200. Is there any other adjustment relating to commission? Yes, somewhere over here if you see. Okay, so commission outstanding it is 130. Okay, so outstanding commission it is 130. I'll just add this, add outstanding commission. This has been given in the adjustment. How much is outstanding? Commission outstanding is 130. Okay, this would be 6,330. Is there any other information relating to commission? Any prepaid or something somewhere? I think we just saw prepaid expenses, right? How much was it? Yeah, here it is. Expenses outstanding 120 over here and prepaid over here. Okay, so that expenses will be assuming it to be this commission itself. Okay, so commission prepaid. How much is prepaid? Prepaid is 30. Okay, so 30 is prepaid. Do we have anything else? Okay, this would be 6,300. Let us just cross check. So commission, if you see, this is 620, is it? There's a lot of mistakes, guys. Okay, let's just look into this. Commission paid, they have written it as 500, but how much is the amount which is there in the question? I think again there should be some alignment problem. Okay, it is not 6,200. You just need to see this figure. Commission is this amount. Okay, so 500 is actually the commission amount. Okay, so commission is 500, and then how much is outstanding commission? Outstanding commission is 130. Okay, so prepaid, you guys can treat it either as commission or other expenses. If you guys are treating it as other expenses, it would be 630 only. Okay, so what is the value which they have considered? Yes, 630. So that prepaid, they're not treating it as commission, they're treating it as other expenses. Okay, so 630 would be the total of this particular commission. So I'll just write it 630 over here. So schedule 2 is done. So what about schedule 3? Schedule 3 would be your operating expenses. Here consider that prepaid expenses. Okay, so schedule 3 would be your operating expenses. I'll just write it over here. Now what and all operating expenses do we have? We got a big list which they have given, right? Okay, depreciation, something relating to office and administration expenses. Okay, so let's just keep on writing the same. Okay, so when it comes to operating expenses, let's just cross check. So this would be schedule 3. Where and all have I mentioned? Here it is. Okay, so I think it should be this figure, 6,200. Expenses for management. So expenses for management, it is 6,200. Anything else wherein I have given effect to this schedule number 3? So printing and stationery, we have got to the extent of 154. Okay, so 154 is printing and stationery expenses. Is there any outstanding expenses by any chance? Expenses outstanding and prepaid. We'll just add it over here. Add outstanding expenses less prepaid. So how much is outstanding expenses? Outstanding expenses is 120 and prepaid is 30. So effectively we'll be getting how much? 6,290. Okay, this would be your expenses for management. Okay, so after this, what else do we have? So after this we have got printing and stationery, right? So printing and stationery, it is 154. Okay, so printing and stationery 154. Okay, do we have anything else? Yes, printing and stationery is done. Do we have anything else? Check out. Yes, 3 printing and stationery done. Expenses for management is done. Pay paid and outstanding we have taken care. Depreciation here we have written. Okay, so how much is the depreciation? So depreciation we'll have to calculate it. Okay, so they have already given you the depreciation in the adjustment. So that is the balance in the provision which they have given. It is showing credit balance. Look at this. Depreciation on building, it is 90, and depreciation on furniture, it is 30. Okay, so I'll just write this. Depreciation on building, how much? 90, and then depreciation on furniture, it is 30. That's all right. So we don't have anything else. Let us just cross check with this particular value. 6564 is what we are getting. Okay, 6564. So let us just cross check with the answer. Yeah, 6564, absolutely correct. So this would be the balance of your operating expenses. So operating expenses, schedule 3 is over here. I'll just give a link to this particular value, 6564. Done. So after this, okay, so what about the next schedule which we have got? Yes, so this is schedule 4, right? So 4 would be with respect to benefits which has been paid. Okay, so let's just talk about this benefits which has been paid. So before that we have got provision for taxation. Okay, so let's talk about this provision for taxation. How much is the provision for tax? In the same adjustment, if you see that given, yes, 30 is the depreciation on furniture. Okay, 220 lakh rupees for provision. Okay, 220 lakh rupees for provision. Is there any other information relating to provision for taxation? Look at this. Here also we have got provision for tax. Okay, so provision for tax, if you see here also we have got, I think there's again alignment problem. Just a second. So registration fee is this. So this should be sundry deposit. This should be the tax provision. This would be the premium amount. This would be the creditors, contingency reserve, furniture and equipment, depreciation. Yeah, clear. Now if you see the taxation provision, how much is it? Here it is 600. 600 is the taxation provision. Any other information relating to the same? Have they given any other information relating to taxation? Just go through this once. Yes, anywhere else do you find any information relating to taxation? All right, so let me just show you this particular provisions over here. Okay, so provision for tax it is. Now look at this information, whatever they have given. It's quite confusing, guys, because here all the information which they have given, it is not properly aligned. Okay, so I've just written the arrow marks for your reference. So income tax is 900 and income tax on interest and dividend is 1000. So put together, if you see the income tax component, okay, so it is 900 plus 1000. Okay, so how much is the total? The total is 1900. Now provision, if you see, they have given two information, right? So here if you see the trial balance, how much is the provision? So provision for tax, they have given it as 660, but in the adjustment they have clearly mentioned that you need to be maintaining provision only to the extent of how much provision should be with respect to 220 should be the closing balance in the provision. So out of 600, if you need to maintain only 220, don't you think 380 has to be written off? This is the total taxes, okay, less provision written off, or you utilize from the provision. Out of 600, you're maintaining 220 at the end. It means to the extent of 380 you have utilized from the provision. Okay, so 1520 rupees will be the taxes paid over here. Okay, so 1520, instead of writing it as provision for tax, you guys can also write it as taxes paid. Okay, 1520. I'll repeat this particular point. Okay, understand this carefully. So here if you see the taxes information, they have given two things, okay, in the trial balance. One is the income tax 900, another thing is income tax on interest, dividend and rent 1000. So put together it is 1900. Out of this, I've got provision balance, okay, in the balance, sorry, trial balance that mentioned it as 600. But in the adjustment they are telling that closing balance will be equivalent only to the extent of 220. So in your balance sheet when you're preparing, 220 is what you'll be showing. So 380 you are utilizing from the provision. Okay, so to the extent of 380 you are utilizing from the provision. So out of 1900, 380 you utilize from the provision, 1520 is the amount which you would have paid. Clear? Okay, now look at this. So if you guys just go back and look into this particular solution, did you understand how we got this 1520? So you guys can just refer to this particular working note. Okay, nowhere in the solution they would have given how exactly we arrived at this value. So what will be the total of this? So the total of this would be 8714. Okay, so the total of this would be 8714. Clear? Okay, the same thing is what they have written, 8714 over here. So the net benefit, okay, so how do we calculate the net benefit? The net benefit, okay, so would be this minus this. Okay, so that is how we are getting this particular amount. Okay, so after this we'll just be deducting this particular benefit paid also. So if you want, just calculate the benefit paid and together and then just deduct it. So what about benefit paid? This would be schedule number 4. This is 6492. Let me show you how exactly do we arrive at this value, 6492. So I'll just have to prepare this schedule of benefit paid. Okay, this is schedule 4. Okay, so what about benefits paid? What and all information have they given with respect to the benefit which is paid? Yeah, what information have they given relating to benefit paid? Just cross check. So we have already written over here in this particular trial balance. Okay, so these things wherever we have written 4, okay, all these are nothing but the benefits which were paid. Okay, so let me just write this. Alright, so let me just write this particular information. Okay, so how much is the benefit which is actually being paid? Yes, look at this. Here if you see claims plus reassurance paid, these are the claims amount whatever we are paying. The claim amount whatever we are settling is nothing but the benefit which is paid. I'll just be writing this particular amount. Okay, so first thing is benefit paid by way of death. Okay, so here benefits paid with respect to death. Okay, so insurance claim for death. How much did we pay over here? 4400 is what we paid, right? Okay, so 4400. Have they given any other information relating to the same? Yes, look at this. Here they are telling that there is still some outstanding to the extent of 1200. So 1200 also you need to pay. So along with this particular 4400, okay, you will be adding outstanding claim with respect to death. Okay, so how much is the outstanding claim? In the adjustment, if you see, they have clearly given 1200. So the total amount which I need to pay, okay, in the form of benefit would be 5600. So same way, let's talk about the next thing by way of maturity. Okay, so by way of maturity of the policy, how much am I supposed to pay? So in the form of maturity, I just need to pay 3000 rupees. Is there any outstanding which I need to pay with respect to maturity? Yes, we do have. 800 is what we need to pay, okay, which is still pending. Okay, so this is relating to maturity. See, life insurance policy, it is not only on the occasion of death, okay, but also on the occasion of maturity we need to pay. Okay, so on the occasion of maturity, how much is it? It is 800. So what would be the total? The total would be 3800. Okay, so anything else which we are supposed to pay with respect to benefits? Now here if you see on the credit side, we also had some balance, right? So claims less reassurance. Okay, so from these amount I'll just be deducting the reassurance. Okay, so if you want, you guys can deduct it over here itself. Okay, look at this. So here only you guys can just deduct it. Less reassurance. That is from the reinsurance. We need not pay this amount. This amount will be paid by them. So 1800. So if you just calculate the net amount, it would be 3800 over here. And with respect to maturity, what is the reassurance value? 1200, right? So deduct this 1200. So how much do we get over here? Here we'll be getting 2600. So total would be how much? 6400. Okay, so 1800 over here and 1200 over here. Is there anything else? Clear? Okay, so after this, is there any other information? And annuities they have given. Okay, 12 is what we are supposed to pay. Okay, so in the form of annuity, we just need to pay 12. So annuities benefit which we are supposed to pay is 12 rupees. Okay, so anything else which we are supposed to pay? Yes? Yeah, here it is. So surrender value less reassurance. Okay, so surrender value what we need to pay is, all these are the benefits which we'll be paying. Surrender value which we'll be paying would be 80 rupees. Okay, so 6492 is the total amount what we need to pay. Okay, so here benefits paid 6492 is what I'll be writing. This is the amount what we need to pay. So once you're done with this, okay, you guys can calculate the net amount. Okay, so what is the net amount? It is nothing but the profit or loss. Okay, before that, let us just cross check the solution. Yeah, 6492. Okay, so total would be 6492. So surplus, how much would be the surplus? So surplus over here would be, the income was this amount minus the expenses was this amount minus the benefit which is paid is 6492. Okay, so 23,212. Yes, the same amount. This would be the surplus. Okay, if you just show this much, more than sufficient. Okay, you need not show any appropriation. They're not asking about the appropriation over here. Is this clear? Anybody having any doubt, any confusion so far? So that's all, guys. If you see the P&L account, 23,218 is the value, okay, or the profit. 23,218 is what we also got. Okay, so now we just need to prepare the balance sheet. Let us quickly prepare this particular balance sheet. Share capital, they haven't given any information. Okay, so there was no information relating to schedule 5. Okay, so let us just prepare this schedule 6 now. So schedule 6 would be with respect to what? This would be with respect to reserves and surplus. Schedule 6, that is with respect to reserves and surplus. Alright, so let us prepare this reserves and surplus schedule. Now what and all information have they given relating to reserves and surplus? So if you guys can just look into this particular thing, we had mentioned it, right? So 5, 6, here it is. Contingency reserve we have got to the extent of 300. Okay, so we have got contingency reserve to the extent of 300. I'll just be writing the same. Contingency reserve 300. Okay, and then this particular amount what we got over here. Okay, so how much is the profit which we got over here in the P&L account? Yes, 23,218, right? So 23,218. So before that, is there any P&L account balance which they have given? Nothing, right? 23,218. Okay, so 23,218. I'll just be writing this as P&L account balance. Add net profit. So opening balance, it is 0. Okay, so 23,218. 23,218 only, right? Yes, 23,218. So this would be the profit. 23,218 rupees would be the profit. Is there any other information? Yes, any other reserve which we have? Cross check once. Any reserve, any fund? Yeah, here they have given one fund, right? So life assurance fund at the beginning. Okay, so it is 1 lakh. Okay, so life assurance fund. So I should be maintaining 90% of the amount in this particular manner, right? Okay, so I've got 10 lakh rupees over here. 23,218 rupees was the profit which was made. Okay, so 1 lakh was the amount, 23,218 is the amount. So total would be 1,23,518. Okay, so this would be the balance in reserves and surplus. So I'll just be writing it over here. So share capital, it is nil. Reserves and surplus would be 1,23,518. Okay, so then comes schedule 7, that is your borrowings. Okay, so let us just write the information relating to the borrowings. This would be your schedule number 7. So schedule 7, which is borrowings. Okay, now when it comes to borrowings, what and all do we have in the form of borrowings? Yes, look at this. Schedule 7, we have got sundry deposit, which is 200, and premium deposit, it is 2,300. Okay, so sundry deposit 200, and then we have got premium deposit. Okay, so how much is the premium deposit which we have got? So premium deposit is 2,300. Okay, so what would be the total? Total of this would be 2,500. That's all. We don't have any other borrowings. So 2,500 I'll just be writing over here. The first illustration, I understand that will be tough for you guys. Okay, but make sure that, okay, so each and every information, once you guys practice, you guys will get to know where exactly are we supposed to show these items. 2,500 done. So after this, policyholders fund, nothing. Okay, so we don't have all these things. Okay, so these insurance reserve. Okay, if you want, you guys can just remove all these things. Funds for appropriation, no, nothing. Okay, so then is the turn of investment. Okay, so what about investment? Yes, so how about investment? How much investment we had? Something, right? A second. Yeah, so what about investment? We had quite a few investments, so we'll just be preparing this particular schedule number 8 relating to investment. We had made some investment in real estate and all, right? So we'll just be writing it over here. So 8, investment. You remember this particular schedule, short term, long term? That is how we are supposed to show it, right? Yes, so same manner we'll just be preparing this particular investment. Okay, so here we have got only long term investment, so long term investment. Okay, so long term investment, where and all have we invested the amount? So if you just have a look at 8, okay, so where and all have we written 8? Here it is. Okay, so one is investment, which is 1,04,000 rupees. Okay, so 1,04,000 rupees would be the investment. So where did we invest this particular 1,04,000 rupees? Is the values correct? Yeah, loans and mortgage, it is 300. So loans on policy, it is this. Yeah, here it is. Investment 1,04,000. Out of this 1,04,000, 500 lakh is being deposited with RBI. That is what has been said. So investment 1,04,000. Out of this 500 is the amount which is maintained with RBI. Okay, so 1,04,000 minus 500. So 1,03,500 rupees would be the value. And then we have got investment in house property, which is 10,800. Okay, out of this 10,800, what have they mentioned? So 170 is with respect to the amount which we purchased during the year. Okay, so 10,800 minus 170. Okay, so investment in house property would be how much? So you will have to show it in this manner: 10,630. Okay, add additions made during the year. So this particular amount of 170 you will have to just show it separately. Okay, so 170 is the addition which was made during the year. Okay, so what would be the total value of this? The total would still be 10,800 only. Okay, and then do we have anything else? That's all. So what would be the total of this? This would be like 1,14,300, right? So 1,14,300. Is there any other information relating to the investment, like the profit or loss which we made, or any other thing? That's all, right? Okay, let's just check the value of the investment over here. So investment 1,13,610. Okay, they have got 1,13,610. How much is the difference? Difference of 690. Okay, let us just see what exactly is the 690 rupees. So let's just look into this investment schedule. So investment in house property, yes, we have got 10,630. Additions 170, we have also shown the same, 10,800. Perfect. So what is the 690 other investment which they have shown? Do we have any other investment? 690 rupees. Have they given any other investment in the question? No, right? Just cross check the total of the trial balance whether it is same or not. 1,04,000, 6,500, 300, 1,900, 200, 6,200, 500, 80, 60, 2,700, 154, 500, 12, 3,000, 4,400. They haven't given any other investment, right? I think they would have missed out this particular information. Okay, so look at this. They have written other investment. Okay, other investment 690 rupees. From where are we getting this information? Okay, we are also exactly getting the same difference, right? 690. Have they mentioned this particular amount anywhere else? Yes. Let me just see this once again. All right, so it is this particular thing. Now look at this. If you see this particular investment, it has to be showed at the cost, right? So where and all have we invested this particular amount? Here if you see, they have clearly mentioned that house property at cost, okay, include 170 lakh rupees which was added during the year. Okay, so 10,800. Okay, so it includes 170 rupees which was added during the year. Now here if you see depreciation, they have already given depreciation account. If you see, so building depreciation account, it is 600 over here, and here for the year depreciation which is being charged is 90 rupees. Okay, look at this, depreciation charged during the year is 90 rupees. So 690 accumulated depreciation is 690, that has been deducted over here. Okay, that is what we are adding it over here in the form of other investment. So either you can add it to the value of this particular building account itself. Okay, so building account itself you guys can just add it. Okay, so just a second. This is 10,800, perfect. 1,03,500, perfect. Yeah, depreciation is what they have charged over here. Okay, so the same depreciation what I told you about. Okay, so less accumulated depreciation. Okay, so far we have already charged 600 rupees, which is right over here. Look at this. So in your question, if you guys see 600 rupees, where is it? Yeah. So depreciation account, the balance is 600 rupees, and then for the current year they are asking us to charge depreciation on building to the extent of 90. So total accumulated balance would be how much? This would be 690. So if you are charging this particular depreciation, the value of your house property will be how much? So 10,110. Okay, so 1,13,610 would be the value of your investment. So investment, schedule number 8, I'll just write it as this value, 1,13,610. This is the value of your investment. Okay, so once you're done with investment, what is the next schedule which you'll be preparing? The next schedule would be with respect to your loan account. Okay, so very simple schedule. Let us just prepare this. This would be relating to loan. Schedule number 9. So not much of adjustment. So straight away where and all we have written a reference for 9, we'll just be writing those figures. Okay, so with respect to loans, okay, so where and all have we written the amount? Yes, the loans. What and all loans do we have? Look at this. These two, right? So loans on mortgage and loans on policies. Okay, so 2 loans is what we have. So I'll just be writing these 2 loans. Okay, loans on mortgage and loans on policies. So what about loans on mortgage? How much is it? It is 300, and loans on policy it is 6,500. Okay, so totally it would be 6,800. So I'll just be writing 6,800 in my balance sheet. Okay, this would be 6,800. I'm just giving a reference to this particular schedule. Clear? So once you're done with this, okay, schedule 10. Okay, 10 would be with respect to your fixed asset. Okay, so building we have already shown it in the form of investment. Okay, so fixed asset we'll just be writing it over here. So fixed asset would be only one, that is the furniture. Okay, so building we are showing it in the form of investment. So schedule 10, this would be so schedule 10 would be with respect to your fixed asset. As we have already shown building as investment, so when it comes to fixed asset, I'll just be showing one thing. Okay, that would be relating to the furniture. Okay, so what about furniture? The value which has been given in your balance sheet. What is the value of the furniture? Here we had written. Okay, so furniture it was 500. Are you guys able to see this? So furniture it is 500. Out of this 500, okay, have they given any other information like was there any addition or deletion, including 80 lakh which was brought during the year? So out of 500, if you just eliminate 80, okay, so how much is the furniture which was there at the beginning of the year? Yes, 420, right? Okay, so 420 was the value of the furniture which was available at the beginning. So 500 minus 80, 80 you will be showing it separately. Okay, and then what else do we have? Look at the other information relating to furniture. Including 80 lakh rupees during the year. Okay, and what about depreciation? So depreciation on furniture and office equipment to the extent of 30 lakh rupees. Okay, so I just need to charge depreciation to the extent of 30 lakh rupees. Less depreciation, this would be 30. This was how much? This would be 420. Do we have any other information relating to furniture? Just cross check once. Here also if you see we have got accumulated balance, which is how much? Furniture and office equipment. Look at this. 80 is what they have mentioned, right? Correct? Yes. So it would effectively be like this: furniture 420, additions which I purchased during the year was 80, just like how we did it for the house property. Okay, so less depreciation. Already there is some depreciation, right? How much is the balance in the depreciation when it comes to furniture? Existing balance in the provision, we had some amount. How much is it? Here it is 80. Okay, so less 80 is the existing balance, and then accumulated depreciation is how much? Depreciation for the year, it is 30, it is not 20, it is 30. Okay, so 80 plus 30, this would be 110. Okay, so less accumulated depreciation 110. So what will be the value of your furniture? This would be 390. Okay, 390 rupees would be the value of the furniture. So I'll just be writing 390 over here in the balance sheet. So fixed asset schedule number 10, this would be 390. Yeah, we are done with this. Okay, then comes cash and bank balance. This would be schedule number 11. Okay, schedule number 11 would be cash and bank balance. Cash and bank balance. Now what about cash and bank balance? How much do we have? We've already written the schedule reference number over here. Okay, so when it comes to 11, here it is. Cash with bank in current account. Okay, so cash with bank in current account. So how much is it? The money which I'm maintaining in current account. Okay, so you guys should be very careful over here. So this would be 2,700, right? So this is 2,700, and then the next thing what we have, okay, so this is 2,700, and cash in hand is 60. Cash in hand is 60. Okay, so 2,760. This is the total. I'll just write the reference over here. $2,760. This is the total. Yeah. After this, what else do we have? Schedule 12. This would be with respect to advance and other assets. Okay, so let us just prepare this advance and other assets. This is schedule 12. Advance and other assets. Okay, now what and all do we have in the form of advance or the deposits whatever we have made? Okay, so all these things you'll be showing over here, like any amount which is receivable, okay, dues from the companies, okay, so and other things you'll just be showing over here. Now when it comes to 12, okay, so here we have got sundry deposit with electricity company. All these things will just be writing it over here. Sundry deposit with electricity company. How much is it? This is 2 rupees, right? Yeah. So then we have got advance payment of taxes, which is 100. Okay, so advance payment of taxes, which is 100. Advance taxes 100. Anything else? We have got agents balance 200. Agents balance receivable it is, okay, 200. Yeah, anything else? Check out for schedule 12. Yeah, we have got sundry debtors 100. Okay, so debtors 100. Any prepaid expenses? We had some prepaid expenses, right? So prepaid other expenses, how much was it? All these things becomes your current assets. Current asset is what we are writing, right? So if you see over here, there was some prepaid amount which was to the extent of 30 rupees. Okay, anything else? Yes, we are also maintaining some deposits, right? So along with this particular sundry deposit, there was some deposit with RBI. So out of this particular investment, 50 rupees was what we were maintaining as deposits, right? So if you remember this particular investment, not 50, it is 500. So 500 is the amount what we were maintaining with Reserve Bank of India, that I'll be showing it over here. $500, okay. Any other deposits which you are maintaining? Just check it out. Any other deposits which you are maintaining? Yes? That's all. There was some receivable, right? Accrued interest and all these things. Look at this, interest and dividend receivable. Okay, even this would be your current asset, interest and dividend receivable. How much is interest and dividend which is receivable? It is 60, right? So 60 is the interest and dividend which is receivable, and interest and rent receivable 700. Interest and rent receivable, okay, this is 700. Okay, so after this, do we have anything else? Yes, that's all. Okay, let us just check out the total of this. The total of this is 1692. So let us just check out the balance sheet. So advances and other assets, they have got 5748. Okay, so let us cross check. You would have missed out something. Okay, let us just cross check this. So 2 rupees, that is the deposit. This is done. Deposit with RBI done. Sundry debtors 100 is done. So agents balance 200. Yes, we have written that. Outstanding premium we did not write. 4056 is receivable, right? So 4056 is outstanding premium. One of the adjustment, okay, 5748. Yes, absolutely correct. Now we are getting the same value, 5748. So this is the other advances. Okay, so advances and other assets. Okay, so advances and other assets, I'll just give a reference to this value which we got just now, 5748. So after this, we have got 3 more schedules which we need to prepare: current liabilities, provision, and then miscellaneous expenses. Miscellaneous expenses, we don't have anything, so 2 more effectively we'll have to prepare. Okay, so let me just prepare the current liabilities. So this would be schedule number 13. Schedule 13, this is related to your current liabilities. So what and all current liabilities do we have? Yes, current liabilities, we have got creditors and other things, right? So we'll just be writing it. So this is schedule number 13. Let's just go back to the question. I would have written 13 over here. Yeah, here it is. We have got sundry creditors of 2300. Creditors 2300. Okay, then we have few outstanding expenses, right? So what and all outstanding expenses do we have? So if you see the adjustment here, we have got expenses outstanding is 120. This becomes your liability. Okay, so after this, do we have anything else? Yes. So we have got certain commission which is due but not paid. Okay, how much is it? So we have got 130 rupees which is commission payable. This is outstanding commission. How much? 130. Commission payable is 130. And then is there any other things? Yes. Yeah. Here we have got claims which are outstanding, 1200 in the form of death, and so outstanding claim settlement. With respect to death, we have got some amount. How much is it outstanding? 1200. And with respect to maturity of the policy, okay, these are the settlement what I am supposed to make. Okay, with respect to maturity, 800 rupees is still payable. Okay, so the total will be how much? 4550, right? So 1200 rupees with respect to 800 rupees. 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 1200 death. Okay, and what about the maturity? Maturity it is 800 rupees. So these are the amount what I'm supposed to pay. Now out of this, is there any reinsurance amount? Is there any reinsurance? Just cross check. Okay, so that's all. How about the total? Let's check out the total. 4550. Let's just cross check. Creditors, check out once. It is not 2300, it is 700, right? So creditors, make it as 700. A lot of alignment problem, guys. So creditors, if you see over here, this is actually 700. I had written this value. Okay, so creditors it is 700. 2950 rupees would be the value. So I'll just write it in the balance sheet, 2950. Okay, and then what about provisions? Provisions, we have got just one provision. Okay, so that is provision for tax, 220 rupees, I guess. It was given in the adjustment. Provisions, provision for tax, 220 rupees. This is the only one item. So total would be the same. $220. Okay, so provision for tax, I'll just be writing it as 220. So we don't have any miscellaneous expenses. Miscellaneous expenses would be 0, nil. Now we just need to write the total. This would be 0. Check out the total. How about the total? Here we are getting a total of 134. Just cross check once. Okay, 1,20,800 is the total. Okay, this should be the total of your balance sheet. Let us just check once. This is the total, 1,26,018. Perfect. So investment 1,13,610, 6,800, 390. Okay, so total of this would be sources of fund. It is 1,26,018, right? So this is one total. So what about application? Yes, this is perfect. Application also we should be getting 1,26,018. So here we have got 1,13,610, that is correct. 6,800 correct. 390 correct. Okay, so 2,760 and then 5,748. So what will be the total? Yeah, perfect. Here we are getting 2,55,000, is it? I think there is something wrong. Okay, so it has included this total also. The total should come from here. Current liabilities, will just be deducting it. Cash and bank balance, how much did we get? 2,760, 5,748. Okay, this is also correct. So this is current liabilities 3070 is what they have got. Okay, current liabilities, I think we have missed out something. Okay, check out the current liabilities schedule. We have missed out something. What is this 120? Oh, this we haven't written. Okay, credit balance which is pending adjustment 120 rupees is that. Credit balance pending adjustment. So we have got a credit balance of 120 rupees, okay, as outstanding, for which we haven't provided any adjustment. So 3070 would be the total. Now check out the balance sheet total. Yes, are you guys able to find this? 1,26,018, and here also if you see the total of your assets, it is 1,26,000. See, current liabilities, we have just deducted it. Okay, so current liabilities you will have to deduct from this particular total. Current liability and provision you just need to deduct. If you see over here, I have given the formula. So this amount minus the current liabilities and provision. Okay, so that's how we are getting this final value 1,26,018. This would be the total of your balance sheet. Okay, so first illustration, yes, I understand. Okay, so it might take little time for you to understand. So make sure that you guys glance through. It's all about understanding the schedule. We did not have any technical adjustments other than prepaid and outstanding expenses in this illustration. All right. So make sure that you guys glance through this particular illustration once again. So in the next class, we'll be talking about the general insurance. Okay. So we'll be discussing about the accounting relating to general insurance business. That would be the Form B. Okay. So here also we'll be solving few illustration. We have got the format of balance sheet, P&L, similar format. Okay. And then we have got few illustrations which we'll be discussing. After that, this particular chapter would be done. So probably another 2 to 3 classes will be able to complete this. Okay, I guess another 2 classes would be fine for us to complete this. Only general insurance is left over. After that, the only chapter left over would be the accounting standard. All right. Make sure that you guys glance through the illustration what we discussed today. Thank you so much.